Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, December 14th. This will be a technical analysis breakdown. So if you're someone that uses charts within trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of clarifications. Number one, the price you see over here will be moving around and changing, and that candlestick you see will be moving around and changing. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here, as they're called, represents 30 minutes worth of time. Stock number one here, TSLA Tesla, and just a brutal move on this one today. If you've ever heard the term gap and trap, this is what a gap and trap looks like. The price closed there on Monday, opened up there, hence the gap up. And then from there, just almost straight down. To be fair, there has been a little bit of a bounce here, but yeah, a brutal day here on Tesla. Huge volume, over 100 million shares traded. So definitely a lot of eyeballs going to be watching this one moving forward. First big update comes based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So if this little miniature bounce that's occurring right here does continue, first key kind of question mark that you got to throw out there and question is, can the price get back above and stay above that 166 mark? So keep an eye on that from a resistance standpoint. And then as far as levels of support are concerned, interesting level, at least for me as somebody that, watches this one on a pretty routine basis, right there at 158, you can see that basically three times, broadly speaking, got down around that general area and did hold strong. So if the price does come back down, then you got to think a lot of people are going to be watching and wondering at 158. But all in all, the downtrend continues. A little bit of a bounce here. Can it continue? I know I'll be watching for Wednesday. Next, MULN, very nice movement here today. Now, granted, it did pull back some, but you got to factor in more so a bigger picture of the chart. But this is also where things get a little tricky from my perspective, talking about it from a presenter standpoint, because I don't know your perspective. Meaning, if you're a day trader, flipper, scalper, and you bought right there and your plan was to buy and sell within 10 minutes, well then, yeah, from that perspective, things look rough. Now, yes, they look rough because basically there was a pullback the entire day. That is true. But again, circling back to, but what if you care about the bigger picture point of view? Well, part of that means you have to include an overall context. And that overall context is, okay, well, what was happening before that downwards channel? Well, you had the big price movement up like that, which now has, given the ability to draw a bull flag pattern. Now, let me be very clear. Just because there's a bullish pattern does not mean for sure guaranteed the price is going to go up, but it is still a bullish pattern and just illustrates that, yeah, the downwards channel is not necessarily the thing you want to see. However, from a bigger picture point of view, it is still overall bullish because the price still has plenty of opportunity to build those higher bases, which is where this 19-cent mark comes into play, as still being that key level of support. But so far, so good. You can see several times now the price has been down around that area, and it has held strong. But if you like penny stocks, if you like to play bull flag patterns, here you go. Next one, Opgn, and overall had the pullback here, but absolutely monster volume. You look down here, and then you compare that to recent history, and you can see not even close, by far the biggest volume this thing has had for quite a while. So let's map out a couple key areas. First key level, that's not really close right now, so I suppose you could even argue it's not really relevant, but it could very well become relevant because this one is a fast mover. But right up there at that 45-cent mark, you can see this is where the party stopped. Basically 4 times the price got right up around that area, and every single time the momentum just did not sustain itself and disappeared, hence the pullback here. So if there is any sort of attempted movement back in the upwards direction, 45 cents is definitely going to be that key question mark that you got to think a lot of people are watching on whether or not the price can actually push up through it. And if it can, that would certainly be a good sign of strength. In terms of areas of support, if you like to play pullbacks, first key interesting level going down here around the 25-cent mark. And then another level, which the only reason I'm pointing it out is because you have 2 levels, 2 very famous moving averages basically at the same level right now. The purple line is the 50-period moving average. Pink line is the 200-period moving average, both right now at 18 cents. So if they're, if you like to play more so deeper pullbacks, then 18 cents presents a very interesting potential trade plan development because of those moving averages down there. But overall, huge volume. Will the volume continue? We'll see what happens. But if you like to play penny stocks with large volume, I definitely keep an eye on this one. Next one, Ffie did this one yesterday. And once again, it's all a matter of perspective because, yes, if you're a day trader and you bought right there wanting to buy and sell within 7 minutes, yeah, from that angle, the chart looks bad. But assuming you care about the big picture point of view, all we had today was higher highs and higher lows with the pullback. In fact, for those of you that watched yesterday's video, this line right here at 48 cents should look familiar. But this was a former area of resistance, but when resistances are broken and closed above, you want to see them act as support. And it didn't hit exactly, but good example here that you could throw right into a textbook. Price came down here, got very, very close to that level, and then get a nice little bounce upwards. But point here being from the, like I said, the bigger picture and higher lows point of view, with that 48 cents, that's the low, and then you factor in that low right there, these lows right here, and if you envision those as stair steps, then you can very clearly see that even with the pullback today, from a broader scope of things, the price is still putting in those higher lows. In terms of areas of resistance, key level to watch moving forward, in my mind, going to be right up there now at that 62 cent mark. So keep an eye on that. But again, assuming you don't care, or assuming you didn't buy at the highs today, everything looks perfectly fine, even with the pullback, higher highs and higher lows, and that is by far what matters most. Next one, AMC, and just a brutal, brutal day. Like Tesla, a massive gap and trap today. But really, the difference here is at least Tesla had some sort of afternoon bounce going on, but nothing like that here occurring. So I'm going to go ahead and actually adjust this level of support downwards, which is not good. Whenever levels of support need to be quote-unquote adjusted in the downwards direction, that just shows that things continue to drift in the bearish direction. But now that we have more data, seemingly the new key level of support right there at $5.50. So you want to keep an eye on that. And I'm going to go ahead and get rid of that line here as it served its purpose, because really in my mind, the easiest way to just gauge this from a resistance standpoint is to continue to monitor that purple line there, the 50-period moving average right now valued at 593. And as that level moves lower and lower, you'll want to watch that. But yeah, just like I said, no doubt about it, brutal move. And hopefully today people use stop losses, because if they did not and they held and hoped, they're not having a good day. But as you can see here, if 550 cannot quite hold up, then the next key level of support after that point would then be down there at $5.35. So 550, 535, next two key areas of support. Real quickly, I wanted to take a break and personally invite you to get signed up for this free live online training that I'm offering next week. So if you've been enjoying what you've seen, you want to learn more about this tool, how it can and should be used to build consistency as a trader, then I want you to get signed up for the free training. If you're watching on YouTube, there's a link in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then definitely get signed up for the free live training. Next one, NVDA, which I'm going to go quicker through these because you've already heard this spiel, but is it good or bad? Well, I don't know. If you're a day trader and you bought right there, not so good, because no doubt about it, there was this pullback here that occurred throughout the course of the day. But what was happening before the pullback? Well, you had this big explosive move up, meaning you have a bull flag pattern. So I don't think I need to say any more, but the other bull flags we talked about were on more so lower price stocks. Here's one that's a bit more expensive. So if you like to play bull flags on higher price stocks, take a look at Nvidia. Next one, Mrna, and a very, very nice pattern here. So you got to think a lot of people are watching it. So as I draw this pattern, let me be very clear. This is not a special talent. I'm not trying to say that this is a great discovery. A lot of people have drawn this pattern. I say all that because when a lot of people are watching the same patterns, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can definitely produce some very dynamic movements. So what we have here is our resistance, our support, the big move up here. In fact, you could even extend that down in there if you really wanted to. And let's put our golf ball down here to make it a little bit more visual. We have ourselves a bull pennant pattern. But as I speak, and this is why I like to do these when the market's still open, check it out. Price pulling back here pretty violently, maybe going to test the bottom part of the pattern. But if it does hold, and if this thing can turn itself around and get the break up through there, then again, no guarantees. But from a self-fulfilling prophecy angle, it is rational to think that a break from the top part here could produce that much more upwards buying pressure. And so if you like to play, or buying pressure, excuse me. So if you like to play bull pennant patterns, definitely keep an eye on it. Next, AAPL, and yeah, pretty big pullback here. But what I'm very curious about moving forward is, can this trend line here come into play, which has been a good solid trend line. And if you like to play pullbacks, and this could, of course, offers you no guarantees, but could somebody accuse you of finding this area down here, some sort of random spot? Absolutely not. There's rational and logic that goes behind it. So I definitely keep a close eye on it right around the 142.75 mark. If this deeper pullback does continue, if the price tries to head back up, I can't remember, did I say the ticker symbol on this one? This is AAPL, Apple. If I did say it, I apologize. But as far as levels of resistance are concerned, I'd keep an eye on that little trend line right there, which puts the breakout point right around 146.25. But obviously, it's Apple, well-known stock. So with this bigger pullback here, if it can get down to that trend line, then like I said, in my mind, that becomes a very interesting risk-reward scenario. So keep an eye on that. But if you do like to play, turnarounds and breakouts, then right up there at that trend line could serve as a good leading indicator that there's more upside pressure to come. Next one, CCL, another one of these big old gap and traps here. But we have some interesting dynamics here going on. Yes, you still have that 855 mark down there as a support, but I want to map out this newer one right here, which seems to have quite a bit of data now at $8.73. You can see a couple times there, acted as support, and then once again right there. In fact, that was the big bounce point after the nasty downwards move there. So keep an eye on that if the price does come back downwards. In terms of levels of resistance, really seems to be all about that purple line here. The 50-period moving average presented some problems there. And then several times today, price can't quite push above there. So in the very near term, the key level to watch will be, let's just call it the $9 mark as that main area of resistance. But I know this one's a relatively popular stock. And with the big nasty move here and then attempted, potentially bottoming out here, if this thing can get back above $9, then I'm not going to say it's going to shoot straight up and retest, the 960s. But there is some wiggle room for this thing to pick up some momentum. Next one, Tqqq, most popular ETF out there that follows the NASDAQ. So if you believe that the NASDAQ is going to rise, then this is one where you could buy it. And because this one will also rise if the NASDAQ rises, just at a much lower price point, which is what makes this such a popular ETF. But like a lot of the NASDAQ stocks, and the market had the gap up, came back down. But in this one, a couple different, very interesting scenarios. First level so far so good. The former breakout point and resistance, which I talked about in previous videos, that 200-period moving average is acting as support. So a classic example of resistance now acting as support. So that'll be that first key level of support to watch moving forward. Currently valued at $21.80. If that level can't quite hold up, then like Apple, you do have this overarching trend line right here that would certainly produce a potential interesting bounce area. So from a risk reward standpoint, and if you like to play pullbacks, that definitely presents an interesting potential trade plan right there. In terms of areas of resistance, if this thing does get a bounce off that 200-period moving average and start to head back up, in my mind, that key initial area of resistance can be right up there at about $22.95. So keep an eye on that. But yeah, there's no doubt about it. Gap and trap today. Big question mark moving forward is this gap and trap a leading indicator of even more bearishness to come? Or is this just kind of one, little data point here that's not going to matter a whole lot from the bigger picture point of view? But as of now, you still got to give the benefit to the bulls because the price is still above this upwards bullish trend line. But it'll be very interesting to see how Wednesday plays out. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the class. It'll be next week, Thursday, December 22nd. At 7 p.m. Eastern time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, hit that like button, leave a comment below. Tell me what you traded today. Tell me what you're watching tomorrow. Little things like that communicate to me you enjoy. And as long as I know people are enjoying, I'll continue to put in the time and effort to make these videos. So again, get signed up for the free class. Hit the like button, leave a simple comment below. Thanks for watching.